Hello, and thank you for joining us today for an update on ARPA single audit related components. There were recently some changes made both by the Treasury and the OAG related to how the ARPA funds will be reported from a potential single audit perspective. So my name is Jamie Wilkie, one of the audit partners here at Lauterbach and Amen, and we've put together just a few slides to help update our clients on these recent changes. Overview of kind of the major updates that have come out. The 2022 compliance supplement, which is the requirements related to major federal grant programs. It's a supplement released by the OAG each year, so us auditors are aware and know what types of tests are required for any major federal programs that you all receive. That 2022 compliance supplement was released back in April and took most firms some time to digest. It's a rather large document that we go through each year. But what was provided within the compliance supplement update was really an alternative approach to the single audit, specifically related to ARPA funding. So as most of you know, you are currently required to undertake a single audit with any federal funds expended in excess of $750,000 within a single fiscal reporting period. What the compliance supplement outlined was really an alternative to that. There are some eligibility requirements. So ARPA recipients that expend over that $750,000 threshold during the year and meet both of the criteria listed below really would basically qualify for this alternative approach. And we'll kind of get into the details of what that means. But you have to have ARPA funds received less than 10 million total. Other federal awards that you expended during the year, not including ARPA, totaled less than the $750,000, meaning the only reason you are required to undertake a single audit is because of the expenses related to ARPA that you have recognized. This alternative is what is being called a compliance examination engagement. So slightly different from a single audit engagement, and we will walk through some of those changes here this morning. So what is different? Under this alternative, a formal schedule of expenditures of federal funds, or SEFA, will not be required to be filed with the clearinghouse, as the auditor will only be providing a compliance opinion specific to that ARPA program. So for many of you that do hit that $750,000 threshold, the SEFA does require that we include dollars related to any federal programs that you may have received during the year. So there's a lot more data gathering and then obviously reporting through the clearinghouse. We will have a slightly more simplified reporting process as well. The report is basically a compliance opinion. For any of you that have TIFs, you can probably visualize kind of the one-page compliance opinion that we issue. We sometimes have this with some grant-specific programs that the auditors are required to provide separate compliance opinion on, and even the compliance opinion that's related to your CIFR filing through GATA. So we have some similarities out there already, but this will be a compliance opinion along with any findings. So as we do our testing related to your ARPA program, if there are findings, we would be required to report those along with the opinion. That findings component would be a very similar format to what is required with single audit. So findings obviously only included if those are applicable. What is the same? We are still required to do some fairly extensive testing related to your ARPA programs. We still must gain an understanding of the relevant portions of internal control over compliance so that we are able to plan our engagement and still assess control risk for compliance related specifically to that ARPA program. And we'll talk a little bit more about that as well. We, as the auditors, will have to have similar work paper documentation. We have what we call PPC programs. Those are kind of our checklists that we have to go through. The single audit world has an extensive list of checklists that we are required to complete as part of our testing. Almost all of those will still be required in some format. I know you all don't see those, but certainly required for our internal documentation and obviously as part of our own peer review process when we get audited every 3 years. We will have to test those compliance requirements. And again, we'll talk about those in just a few minutes. What's also the same, the due dates for the submission of this compliance attestation opinion. So let's talk about those compliance requirements that are relevant to this alternative for ARPA programs. So we have 2 that will be required to be tested as part of our engagement. The first compliance requirement, and again, these would be what's outlined in the 2022 compliance supplement, is activities allowed or unallowed. The objective here is to determine whether or not your ARPA funds were used for ineligible uses. As many of you know, ARPA, the final guidance really opened a wide variety of options for you all to spend dollars on, but we still do have some ineligible uses such as pre-funding your pensions or debt service payments, for example. So we are required to test what those dollars were actually used for if you have recognized expense. There are some suggested procedures. So these will be the types of things that we will be undertaking as we come in to do this alternative testing, really gaining an understanding of the design and relevant portions of internal control over compliance related again, specifically to your ARPA program. We gain that understanding by a variety of different things. Inquiries of management, maybe your grant related staff who's involved with ARPA, any personnel that are really involved in the reporting side of your ARPA program. We will be inspecting your relevant documents, so things like your project and expenditure reporting to Treasury, any internal, board approval of use of funds, and then finally observing your activities and operations. So again, we have to gain that understanding of internal control over compliance. So that would be an understanding of things like your accounts payable process and approvals, some of those more broad kind of internal activities and operations that do ultimately still affect the ARPA funding. So we will be selecting and reviewing a sample of your ARPA expenditures to basically determine that those were used for eligible uses and not any ineligible uses. So that will be compliance test number 1 related to this alternative reporting. Compliance testing number 2 relates to allowable costs or cost principles, determining here whether you significantly deviated from your established practices and policies regarding incurring costs. Again, we have some suggested examination procedures provided within the compliance supplement, obtaining an understanding again of those design of relevant portions of internal control over compliance, and establish policies and procedures regarding incurring costs by again performing some of the similar procedures that we outlined in the prior compliance testing requirement. Inquiries of management, supervisory staff, really any staff personnel involved in the ARPA program. Again, inspection of relevant documents internally, observation of your activities and operations. So what we will be doing here is testing again a sample of those ARPA expenditures to determine that you all treated those costs consistently with your existing established practices and policies. So again, we will have to go through, still assess risk related to, your federal program or ARPA program. We will have to do compliance testing as we've outlined on these last 2 slides. And then obviously our internal documentation of that entire process. We'll then get to the reporting side of this alternative testing, really again made up of two parts. Part one is that new compliance opinion. It is prepared in accordance with what we call ATC 315, which is auditor guidance related to compliance attestation reporting. So here is where we kind of look for reporting requirements, what has to be included in that compliance opinion, et cetera, as well as in compliance with our government auditing standards. If you recall, I did mention that if there were findings related to our compliance testing, we would have to report those as basically an appendix to this compliance opinion. The format would be similar to single audit findings, where we would outline the finding, the cause, the effect, things of those nature. We then do have the same submission deadlines as I mentioned before. So similar to single audits, the due date of the compliance opinion will be within the earlier of 30 calendar days after receipt of your audit report, so your actual financial statements, or 9 months after the end of your fiscal year. What I will tell you is we have not yet been provided any guidance of where exactly we're going to upload or submit this compliance report and any findings, if applicable. So we do expect some more information coming out, probably both from Treasury and the OAG. But we did want to take this opportunity today to update you all on some of those major changes that did come out related to ARPA specific and this alternative to the single audit if you expended more than $750,000. So from a practical standpoint, we outlined this new compliance opinion. We will be providing a template of that within this newsletter that you all are receiving now. Findings, again, if applicable, we will have to discuss those. The one big change here that I know affects many of you is we do not have an independence issue with our actuary team if we are preparing this compliance opinion. So this is a significant difference from the single audit world, where we have much more stringent, higher level independence standards. Typically, we've had to work with many of you when you utilize our actuarial services to use another independent actuary to provide those GASB 68 and GASB 75 for OPEB accounting disclosures. So the note disclosures and required supplementary information within your annual audit really have to be kind of looked at by another independent actuary firm to sign off on those figures. Under this alternative, we will really not be a single audit engagement and not required to adhere to those more stringent independence standards, but we will really be what we call a GAGAS engagement letter. And so in that environment, we simply document those services that we provide and what the controls are in place to allow us to provide those multiple service lines. So for any of you that we've already had a discussion that ARPA has pushed you into that single audit environment due to recognizing those expenses, we will be coming back to you to basically work through a GAGAS engagement, whereby again, our actuary team can provide those GASB 68 and GASB 75 accounting disclosures. We want to thank you again for joining us today. We certainly are happy to always answer any questions that you all have related to ARPA. My name is Jamie Wilkie. I can be reached at jwilkie@lauterbach-amon.com with any of those continued ARPA questions. And as always, we will continue to provide guidance and support as new information is released. Thank you for joining us.